Hello, and welcome to another update video about Bitcoin just before the daily candle close. We had quite a bit of unemployment data this week come out. That unemployment data was actually pretty much bullish for crypto, at least based on the numbers. Yeah, but we haven't really seen too much movement. I mean, we've seen some upside in crypto, but it wasn't really the catalyst we needed to break out of the ranges. Yeah, we had the unemployment claims. We had, what did we have? We had the non-farm employment change. Then we had, and that was, by the way, you can see that it was quite a lot here. This is actual, this is forecast. And if you open this little one, then you can see that actual, if actual is greater than forecast, and it clearly wasn't, it's good for the DXY, for currency, for the US dollar. Now it was way below, so you would typically expect it to be bad for the DXY and good for crypto. Didn't really see that much as a catalyst, you know. What else did we have? We had the job openings. Yeah, they were also lower than the market anticipated. So that means the labor market in the US is getting a bit of a hit. Certainly in line with what I posted a few weeks ago on Discord and Telegram, that while on the surface the labor market looks decent, it's brewing in the background. Yeah, so all of that is currently playing out, but yeah, we don't really see a major impact on the crypto market. I mean, tomorrow we've got non-farm employment change and unemployment rate, so that's coming out at 8:30 Eastern time tomorrow, so that might impact the crypto market a little bit, maybe sort of the last catalyst this week. I think the stock market is closed tomorrow, so nevertheless we get these data or the reports. Yeah, so we've got, for example, here unemployment rate forecast 3.6%. That's the forecast, and you can see here also the usual effect. So if actual is less than forecast, it would typically be good for currency. If it's higher than forecast, it would be, you could say, good for crypto. And then we've got the non-farm employment change as well. Here you can see as well, forecast 228K, and actual greater than forecast would be good for the US dollar, whereas actual lower than forecast would then be good for crypto. Not directly, but it's more like, because you get that inverse relationship or correlation between the DXY and crypto. At least it's temporarily, it's there somewhere. It's not always the case, right? You know, I don't put too much weight on correlations because they come and go. They are not a rule. Yeah, that's sort of what we need to look out for tomorrow. Just wanted to highlight that because it already feels like Friday. I don't know. And yeah, let's take a look at the Bitcoin chart. This is pretty much unchanged. We're just moving here in a range, a clear range. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. And it's not moving at all. Yeah, we had this nice impulse to the upside. You could say we had either off this 10th of March low a 1-2-1-2 setup, and then we have several possibilities where a bottom could have been found. It is even possible to come back a little bit lower, but all of that would not be bearish as long as we're holding really the 21,557 level. Even below that, we've got some more support down there for the bulls. So again, just to emphasize again, we've reversed out of our trend reversal areas here, and we're holding this small one at the moment, which is really the micro support, going all the way down to 27,560. From here, we have a chance to rally. The idea is that either we rally from here, or if not, if we fail here, because it is this make or break point that are now regularly emphasized or repeatedly emphasized. If we fail here, it wouldn't be a major problem for the bulls. They would just move into the next support area and rally from there. And you can, because this is so choppy, you can come up with different corrective wave counts that would work out nicely and would support that statement or that scenario. And if we don't hold this area, which goes down to 24,940, we could come down even lower and then rally from there. So there are, the bulls have done a good job over recent weeks in that there have been a lot of impulses to the upside, a lot of 5-wave structures to the upside. They allow for us to calculate, depending on which scenario we're looking at, these different Fibonacci support areas. And this should be a good, at least stop for the prices if they come down and if we lose the micro support level. But as always, be aware that until we really see a bullish reaction to these fib levels, we could easily just go through, right? So be aware of that. But for now, the scenario is bullish, and it's even, in my opinion, imminently bullish, which doesn't mean it has to happen. But in my opinion, a breakout to the upside is likely as long as we're holding the pivot. This pivot or trend reversal area is this small one here, where I'm counting currently the move as a 1-2 setup. One of the best setups in market structure in crypto, well, in Elliott Wave really, because what would follow is typically a third wave. But I currently have no evidence that the low is in here already. We've seen a bullish divergence already in the previous video. Let's just open it again on the 1 hour chart. We saw that bullish divergence between that low and that low. Both were, that the wave W low here at around 27,850 was made yesterday, and the low of 27,730 was made today. But the RSI showed a higher low. And that is at least something to watch out for, that we could see a bit of a reaction. We saw a bit of a reaction that was, however, too weak to really confirm that we are starting to move from here. I think it could become quite a boring long weekend, because the markets haven't moved all week. And I mean, tomorrow we get a bit of a catalyst. Yeah, we just looked at that, but the market hasn't really cared about unemployment data all week. So at least the crypto market hasn't really cared about unemployment data. So I'm not sure if that is going to get any kind of traction. I mean, we don't have any inflation numbers, or no inflation numbers came out this week. We still have, I think, 3 weeks to the next Fed meeting about interest rates, and I think the market is a bit undecided about what to expect in terms of interest rate increases. So do we see one more or do we not see one? There's pretty much a very similar probability outlook for that. So yeah, it's just that sort of balance of forces that we can currently see here in the market, and just that sideways movement. So, we just need to be a bit patient. All the comments that I made in previous videos still apply. The market has not really moved forward. So no progress at all, just sideways grind. I mean, could this be a small 5-wave move up? I mean, possibly, it's not reliable though, especially not in this time frame. But to be honest, it looks rather like a 3-wave move. But yeah, surely, I mean, we could break out from here, but at least what I would want to see from here now as sort of a breakout signal would be a break above 28,330. That would be the very first one. It would indicate a break above the X wave high, and that would basically highlight that a low was most likely made here in our trend reversal area when we hit the golden ratio, the 61.8 fib retracement. After that, price would need to rally to break above the wave 1 high, which ended just below our resistance here at around 28,830, and then we need to break 29,200. But besides that, there is not much more to add. Looking on the daily indicators, yeah, we can see that the MACD is certainly increasing negative momentum. Let's open that up. Yeah, you can see that here, and negative momentum is still increasing, which is interesting because price hasn't really followed through yet. So while the MACD is pushing lower and negative momentum on the daily is increasing, again, price hasn't really followed through. And RSI also crossed bearish, but is in the bullish range above 50. The MACD was on a pretty high level here as well, but certainly we were higher in the past, way higher. So it's not the sign that we have to come down lower from here. But yeah, momentum is down, but the price doesn't really follow through in terms of momentum. Yeah, so it's just sideways action. So the price does not really follow that indicator. But that's often why I don't use indicators too much. I mean, I use indicators, especially in crypto, not to pick tops, but to pick bottoms. That works much, much better. For example, the RSI here on the 10th of March, I did post it on Telegram at the time that we have probably a substantial low in place. Worked out nicely, I think, because they don't normally work to pick tops. They do work very well to pick bottoms. 4 hours, by the way, bearish as well, the MACD. But yeah, it's a range, so you can't really rely on them too much. And so I picked I look for divergences typically, and I look for significant lows. But I think it just needs a bit more patience. I know it's frustrating, but I can't change it. What might be the case is that we get a bit of a triangle, not necessarily an Elliott Wave triangle, but you start to see here a little bit of reduction in volatility, but it's nothing. There's still a lot of space. Yeah. So yeah, all we can do is being patient. And again, the chart is prepared for a breakout. The bulls just need to take it now. And really, that's up to them. That's not up to us. Yeah, we can really only analyze the structure that we see, but the market needs to make that decision if a follow through is going to happen. All right, that's my update about Bitcoin. I hope you will like the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.